Welcome back then. My name is Arabile Kumete. We get straight into the market picture then, which certainly has been very interesting of late. It seems that investors may be shying away from the tech counters. Why? Well, who knows? Definitely the markets determine what changes and what doesn't. So let's take a look at exactly what is happening in this market picture then. So overall, we're getting a sense that it is a bit of a broad rally that is trying to pick itself up, should I say, as we get more into the cyclical stocks. So we're seeing again across the board out in the Asian front, there's a lot more consumers perhaps getting into these stocks that are bound to look a little bit better when you open up economies. So perhaps shying away from the tech counters, as I noted. 1 2/3% higher for the Nikkei out in Japan there, while the Hang Seng in Hong Kong enjoyed itself 1.2% to the good as well. Onto the European board, we're only seeing the DAX pretty much sitting mostly flat, even if that is a marginal loss at present, but not really too much to write home about there. But a solid gain then of nearly 0.5% for the FTSE 100 out in London. So that tells you then that this should be a positive picture even for South Africa, following the record highs that we even saw out in the United States. And that is definitely what we're seeing on the local front, above 67,000 points at 67,081. In fact, 1.3% to the good there is the all share, in fact. And the big gain is today, the resources helping to pick up that sector quite prodigiously is gold mining and platinum mining. Look at that, a near 6% rise for platinum mining. Impala Platinum coming out with their earnings a little bit earlier today, 384% gain in that headline earnings figure. That tells you the sentiment then that the PGM space is certainly on the upward trajectory. Whether that will continue for the long term, of course, that will depend, but one can imagine that this is certainly a good start despite the pandemic. They're still able to plow through and make some solid numbers throughout today's trading, so nearly 6% higher there. We do have, unfortunately, a few negatives. Industrials going down 1/3%, with the financials also following suit as the banking counters languish ever so slightly. In terms of companies that have gone higher, you are bound to find the platinum shares, which are of course sitting nearly 6% to the good, sitting in the upper reaches then of the JSE all share. The likes of Sibanye Gold going up now more than 8%. In fact, you're bound to find even Impala Platinum itself doing a little bit better on today. As I noted a little bit earlier on, we do have negative shares, and those are sitting right over here. The likes of Truworths in the retail space losing over 4%. TFG has done well of late, in fact, but now unfortunately languishing ever since, of course, purchasing Jet not so long ago from Edcon. Onto Pick n Pay then as well, which is 3.6% weaker, unfortunately, today. Again, that retail space suffering, with Roynet also 3.4% weaker. Onto the commodities board then, a bit of a mixed one across today's picture. Brent crude oil only slightly higher. And I suppose the questions on this front will certainly be around what exactly is going to happen with supply when the rest of the world begins to open up, and whether demand then will be able to sort of plot itself into that mixture, and that will then mean that this price goes higher. But does supply remain as it is for the longer term? That will also be a question that the market will look towards as well. More than 1% lost as well then for the platinum shares, platinum itself today. As you can see, the commodity going down to $1,255 a fine ounce. Also losses then for platinum, now sitting below 1,800. In fact, onto the currency, massive weakness. Yesterday we saw slight gains following the budget speech by the finance minister Tito Mboweni. Of course, we saw the likelihood then that perhaps we'll be able to even out that debt structure or that debt situation, and perhaps stop just shy of 90% of GDP in the next few years. That is, of course, the hope. We saw that there were no tax increases with regards to how much you'd be paying a little bit more. Instead, the tax brackets themselves were actually changed, meaning that you could actually drop off into a lower tax bracket, which then sees you paying even less tax. The bottom tax bracket could see you save at the very least 750 to 780 rand more every single year. So that's going to be very interesting there. With regards to the rest of the currencies, though, more weakness across the board, 1.5% more than for the euro and the British pound. So we're seeing some massive weakness for the local currency out on that front. Only a slight 2.2% gain for Bitcoin. We say slight, considering how much it climbs. That certainly is a small figure. Let's chat now to Jamil Ahmed, who does join us now as well, as we get through to this market picture a little bit more from Naga as well, who joins us right now. Jamil, always good chatting to you. Thank you so much for the time. There's a day where you feel like it's profit taking, then the next day they're back up like they are today. Where are we exactly? What exactly is going on in this market? Are we just bowing out of the tech stocks?
That's a great point, Arabile. I think that what we're seeing is the beginnings of the rotation trades taking place at a little bit more of an increased frequency. Now, to give you an example, we have this hope that we are slowly but surely turning the corner and hopefully getting vaccines out there, and hopefully economies will slowly be reopening up to a better productivity. And because of this, you have these rotations that are taking place. Like, for example, in the United Kingdom, there's now hope that by the second half of June, the economy might be able to get back to normality of 18 months ago. So we're seeing a little bit of moves towards airlines and so on, a little bit of move below tech stocks as well. But nonetheless, we're still talking about another 6 months' time. And I think that every economy and every market's going through this, this very challenging period at a complete different pace and in complete different circumstances too. So I do think that we're going to see a bit more rotation trades taking place. But I'm not going to hang my hat on the table and say that this is the time to take your money off the table for tech stocks, because I do think that the challenges and also some of the patterns that we've embraced during this pandemic, working from home, staying at home and so on, I do think that it's not a magic wand and everything's just going to go back like that. I just think that it's going to take a little bit of time to gradually see life getting back to where we fondly remembered it before.
Yeah, that rather recovery, though, does depend a little bit on the $1.9 trillion stimulus package that is set to be voted on in the United States on Friday evening. How much impact will it have, though, on things like the market? I mean, does that mean that more risk on trading will be available? Investors willing to take on a little bit more risk because more money perhaps in the market?
It absolutely does matter. I think we look at it as a circumstance where the market's priced us in to a degree, but one thing the market is still not priced in completely is the ability and the flexibility of whether that's government or central banks to keep providing stimulus, whether that's through cash in the economy or it's through lower interest rates, bond purchases, it doesn't matter. As long as central banks and governments continue to say that in the periods after this pandemic finally hopefully closes, that we will remain a very accommodative policy, which is why the policy speeches from Powell are very important. The ECB chief Lagarde just a couple of days was on the same narrative too. I do think that risk-taking is still possible. We still can see stronger stock market valuations, but at the end of the day, we also have to think as persons that are watching the markets that we have planet markets that are showing this picture of a paradise and everything's wonderful. And then we have planet reality where many of us have been stuck in this pandemic now, and what seems like a time travel where time just hasn't moved and life hasn't moved for at least 1 year. And I think that we have to give a give and take at some point. But nonetheless, as long as accommodative policies in place, central banks and governments continue to show that they will continue to do more, or at least keep policy very flexible, then stock markets historically enjoy this type of news. What impact does the oil price have at this point in time? I mean, now it's at 67 odd dollars a barrel. It does look like perhaps 70 could be the next sort of upper limit, if you want to call it that. Is this really just dependent now on what happens with demand and the opening up of economies? I mean, we saw the issue with Texas and that cold weather and how that's impacted things, but more so now just about the vaccines and the opening up of the global world. Pretty much, when you take into consideration the drama that the oil price has been through over the past 1 year, from stuff we didn't even know was possible, negative prices the first time in history, prices could go to zero. Nobody even really thought, or very few thought, that was possible. But oil prices have recovered since then. We were at something like 40% over the course of 2021 so far. I do think that as economies continue to open up, and hopefully, fingers crossed, these vaccines continue to show that they will work against new variants and against the old variants too, on a uniform way, that we can see oil prices go towards $80 over the course of 2021. I think for US oil, we're looking at between 70 and 75, but for Brent crude, we're looking towards $80. I don't think that we can go massively above these numbers. I still think that will be an ambitious target, because again, we're talking about, you put it rightly, 1.9 trillion extra stimulus the US wants and needs. It's already spent, include that amount, close to 4 trillion. There's still more than 10 million people in the US alone that remain out of employment against 1 year ago. So these challenges are going to remain in place for a very long time to come. Unfortunately, we just hope that life can get back to normal productivity, and that's why oil prices can move higher on better demand
I think that the supply story is that we already have enough supply there. We just need to see the demand improving for a better oil price.
Yeah, we'll certainly see how that plays out as well. Very quickly, though, I'd be remiss if I didn't ask you some of your quick thoughts with regards to South Africa's budget. Yeah, the finance minister delivering that yesterday. Did you think it was a little bit nuanced? Did he balance it out correctly?
I think there were some hard-hitting truths in the statement. If those statements and those truths were not isolated to just South Africa, I'd be more concerned. For example, rising debt, what could happen to unemployment and GDP, and so on. But because we are looking at a tremendously global challenge where, I'm sitting somewhere we've had the worst economic fallout in centuries, I don't see it as big of a deal. But again, South Africa has to see lower interest rates. I would say again on live TV, it needs more domestic policies to help the domestic economy grow, because external demand remains very weak because of all of the different moving places when it comes to the pandemic and the world economy.
It's a telling story then, and as you said, it's going to be very important to change things around, find something that certainly works. Jamil Ahmed, the Director of Investment Strategy at NAGA, joining us there to unpack this market picture. Thank you so much for your time. Always good chatting to you, and we'll do it again, of course, very soon. Thank you so much for joining us then here at the Johannesburg Stock Exchange.